and we're up a little bit. So we closed at 266.61. So we're up 40, 50, 60 cents. It's perfect, perfect 30-minute high play. Open trades, any, we had a lot of trades expire worthless last Friday, which is exactly what we want. It was April monthly expiration. So we cleaned house on a lot of stuff. We have a few oils left. I'll just go through them real quickly here. Oh, actually, and I put it in the letter for those of us in this LFIN, LFIN that was halted. I did not get assigned stock on Sunday, so that expired worthless. KRE, we're in some short puts. That's fine. Oh, this QEP got assigned. We had a covered call on that. XLE, we're still in. That's fine. It's extended. We have a covered call and short puts. WDFC, the robot, deep retracement. I sure hope it holds right here, but nothing to do. Snap, we entered on Friday. A new play, GTLS is a watch. We'll see what that can do today. CVNA is a watch. That looks great. TBT yields. Greg did an awesome piece in the Master Trader Advisory letter about analyzing the yields and trying to talk truth about it instead of just fiction. But yields look higher. We want to watch that on a pullback. VMW, we're watching as a put trade, which actually started as a gap trade last week. Remember, we were looking at gaps and we're like, this looks great. We need to watch it on a pullback. And so that's exactly what I've been doing. It's been in my watch list minder. Home Depot. Now this is a trade bottoming pattern here on the rising 200 on the daily. Weekly is stabilizing. Monthly is a buy setup with a bottoming tail, even though the month's not over yet. And the trigger is not until it gets over last Wednesday's high. Then we have a put spread on that. Grub, we had a trade last week. You know, I kind of scared me the next day and killed it break even, but it's a new trade over the week's high. Now, let me look at all of these gappers because we got a ton of them today, which we love, right? Earnings season. Look at this thing just getting plummeted. I don't even know what this is. Grid sum holdings, no clue. Look at this monthly, weekly chart here. Just solid, solid, solid red. Daily, railroad track declining 20, 50. I mean, this right there would have just been a no-brainer short. This declining wedge, breaking support. But anyway, it's opening here at 485. I have no interest in it right now because there's just no interest. I have a lot of them here, so I'll try to, let's focus on the tier ones. And then I come back in throughout the first 30 minutes, I'll come back and keep looking at them and see how they shape up. This one, VVC, another one I've never heard of. I have no idea what it is. Vectron Corp. But nice multi-month consolidation here. The 20 and 50 are now rising. It's right on the 200. Look, it's gapping up to, it gapped up to 69 and is pulling in a little bit. The gap is too big for me to make it a tier one trade. Look, it's off the charts. Here's 68. Here's my weekly. Look, 69 is way the heck up here. That's gapping right to resistance. If, however, hypothetically, it was just gapping, low 66s, then that would be a tier one trade to me. But it's a bullish gap without a doubt, but it's untradeable. And Greg, as you know, has an awesome advanced gap trading course. SPWR, this one was in my watch list to see if it could hold up on a core trade for this huge double bottom on the monthly. We had a wide range igniting on the weekly, but it's actually on my gap down list today. It's trading at 922. So then I mark that off on my daily and see what it looks like. That's a bearish gap now. It's a bearish gap. So it's in the penalty box. There's no new trade, long or short, but it's in the penalty box for my core watch. MDR, little oil, gapping up to 720. This one's also too excessive for me for a gap. You know, it's gapping right up here. That's too big to make it an interesting trade for me. AKRX, look at this, also getting clobbered. It must be a biotech. So this is exhibit A of why we don't trade bios. It's not worth the gap risk to us. You know, $13. Look, it's off the charts. Look, I would have to blow this up to get to 13. It's that much pain. Hasbro has some pain. Ugly monthly, ugly weekly. Oh, you know, it's not a climactic buy setup at all, but it's gapping down here. It gapped down to 76 and buyers are stepping up. But is there a trade? So 79.60. I mean, could it be a gap and snap? So it's here, let me blow this up. Well, see, 79.60 is off the charts. So it is oversold. It's not technically a master trader climactic buy setup because we want them far from the 20. So no, and I should do a lesson on this. Yeah, I will. This was a climactic buy setup. Many. I mean, a sloppy one. It's not textbook, but it's just way oversold. Got far from the 20, and then here, finally, buyer stepped up with a wide range bar. I would have preferred a lot more volume down here. You know, it rallied and now new lows. So this is not a CBS, but could it give us a day trade if this 15-minute chart can pull in and give us a nice higher low? The answer is yes. So nothing to do with the open. It's not a tier 1, but it's definitely a watch for a day trade. HSIC. See, it's very spotty, so I don't know what's real in terms of volume, but let's just say it's, you know, opening up at 72. So just eyeball it here. I don't even need my horizontal line. If it's gapping up right to 72, I mean, my weekly's okay, the monthly's okay, not, you know, not picture perfect, but then it has room to 73 and then all the way up. There's a price void. So I like this one, depending on where it's really opening. I'm going to put that in a little 5-minute thumbnail. Cough. There's no volume. I don't know why that's there. I'm showing a print of down $1.83, but I'm seeing no volume, so ignore it. SJM. No volume again. So I don't know what to do there. It's just I'm seeing prints is why they're showing up in my gap list. KMB had earnings. Okay, now let's see what we have here. Still, look at the relationship of these moving averages. That is very telling right there also. That is just being liquidated. It's in a long-term downtrend. 200 is down, 20 is down, 50 is down, 20 below the 50. It's gapping up though today, and just like, you know, you had some volume Friday, but just like that other one we talked about, I wish this was much more oversold on the daily. But it gapped up, sloppy came in and is holding. Could we get a day trade? Maybe, but we're still swimming upstream, and I wish the daily was more oversold. Mattel is getting drugged down with that other toy, Hasbro. NTAP was a bigger gap earlier. So it's the light volume. It's just hard to tell. But look at this beast. It's a beast. I mean, it broke out. It's just consolidating at the upper 85% of this run. Relative strength to the market. All-time highs here, weekly, monthly. This is a beast. So it's, I don't see it as a gapping stock, but put it in the beast column. CBI getting clogged. Here's sloppy daily, sloppy weekly, but it's gapping 1258. So it's gapping right here to this prior low. It's extremely sloppy. I mean, I'll watch it within the first hour, but not a tier one. PRTA, more than 50% haircut. This must be a biotech also. Prothena, sounds like it. It's just, this is why you're gambling. It's gapping to $14. I don't even see $14 on here. This is the monthly chart. That's where it's gapping. My God. That's just pain. But nothing to do for a new trade. All right, Greg's going to come on here. I told you I had a lot of them. Lulu gapping down. Now, this I like. This is going to be a bearish, not an island reversal, but 94.33. It's extended. This might be a nice bear call credit spread candidate. So that I like under a 30-minute low. Alcoa is getting killed for some reason. $54, so it's gapping right to this support, kind of this measured move looking thing. Nothing to do right now, but that's a bearish gap for a big aluminum company. AGQ is silver. That's gapping down. I even noticed, oil was down a little bit. Zion was gapping. Now it's not. PSA. I don't see any volume, so nothing. All right, 9:17. I'm going to turn it over to Greg, but feel free to type questions, and I can answer those while he is talking.
Hey, good morning, everybody. I'm going to go over a few things with you here. Where is that? Okay. So Dan mentioned the letter and what I wrote in that letter, because over the weekend, at the end of last week, everything was about bonds and they're jittering the market and so on. So if you're not a subscriber to the advisory letter, some are not, especially those that are watching here on YouTube. The essence of what I wrote, which you can read it right here, about bonds. And we went through that and looked at the charts, and I'm going to bring them up quickly as we go through this. So there was a little bit of an overview on the market, which I always do, and we do some videos. But I talked about the fact that there's been strong demand for crude oil. It's positive for the market, and that the numbers for the employment are good, and the fact that bond yields are actually going up, and that is what's supposed to happen right now if the economy is actually improving, because there is a demand for money. Now, short-term interest rates, not by the Fed, where they have started increasing those rates, but by the market itself, and I'll show this to you, have been going up for over a year. So the worry is the fact that 3-month yields have been moving up higher and higher and higher in a bull market uptrend, and that the 10-year The 30-year, the 5-year, while they moved up, they were flattening out and they actually pulled back in February. So now the big scare is inversion. So the fact that bonds leaped higher, or the yields leaped higher last week, kind of alleviates that. And the yield curve isn't even close to inverting. But anyway, so now it's like, okay, bond prices are going up, or bond yields are going up. And then I talked about what should happen. Well, not until it actually inverts is it actually a problem. And if you go back and look at many years, as far as bond yields going higher, does it affect the market? And while there becomes jitters because there's some of that money that might go into stocks goes into bonds, it really didn't affect the market that much. Interest rates would have to go considerably higher before that would happen. But if they invert, that is when we've got a real problem, and it's not even close. So all of this talk about bond yields going higher and inversion and so on, it's like, well, they need something to talk about, something to worry about, something to scare the public out until the very end when they're like, you got to get in here, and they put on their party hats for the next Dow level. That is when there's no worries and you got a real problem with the market. So let's take a look at some of these markets right now. Let me change this to this screen, and we look at where the markets are at. So these oil stocks, so let's go with oil because oil's been doing well, right? And you can see it's in a nice uptrend, starting to pick up momentum sideways, here. This is where it had the momentum move, backed off from this resistance, sideways, has gotten through it. And now, this pullback here today, this is a 24-hour chart. This pullback here today will certainly affect oil stocks, which I'm all for that because they're a bit extended and I want to short some intraday, pulling them to go down. That is not going to change the bullish structure and uptrend of crude oil right now. So unless this pulls back under that swing low, this trend is up. And, just based on the concept of minor support, the high prior to the next high, buyers should show up in this area here. And would kind of be like around a little further to the left there. But anyway, this could drop some more, but just based on this daily chart, it should hold somewhere in here. But if it breaks below that bottoming tail bar, there's a problem. Short term, anyway. So as far as bonds go, what I covered in the letter was the fact that here's the 30-year. You can see where it's at, just over 3%, but hasn't exceeded the high yet. However, the 10-year, which is the one that's primarily talked about, has, and it's pushed up, and it looks like it could actually go through 3%. And that's probably going to worry some funds, and you'll hear it talked about, but really not such a big deal. You go to the weekly chart, and you see the bottoming process, and now the move above the highs. There's a prior high right here, so maybe it backs off. But the main point being that these yields going up, if they did not go up, we'd have a big problem, because if this was flat to declining, and now you've got 3-month yields pushing up as they are here, eventually the 3-month will catch up with the 5-year. Right? So it's still quite a distance away. You can see the level that it's at. The 3-month is 1.773, 5-year 2.814, the 10-year 2.973, and so on. So it's talked about the fact that they're narrowing. Yes, they do narrow, as the economy improves, because the Fed's job is to control inflation and not let things run away. So their job is to have stability. And, you know, the market is anticipating that this is what they're going to do. And that's why these short-term interest rates have been rising for 2 years, right? Where they were close to zero. Right? All right. So we're not worried about these interest rates. It's actually what is supposed to happen right now. Okay? And the broader markets, let's clean up this mess here. Go to the daily chart. So right now, you know, we had that little bit of an ugly day on Friday. You know, markets took some profits and went down, backed off from the overhead resistance, just what it's supposed to do. Buyers are at support, sellers are at resistance. Now it had a consolidation here, which created a higher level of support, and buyers are stepping up there now. So we may be in for some more or even worse choppy price action for a day or two. We'll see. There's, you know, lots of earnings coming out, which we're going to take a look at until this gets resolved as to whether these markets can get through this high or whether they're going to dip further down. And that makes it difficult. But, you know, the gapping stocks that Dan mentioned that are gapping on earnings, those could be the go-to stocks that, you know, since that news is out of the way, that'll be where we want to, you know, to trade. Let's see. Ask question. Intraday, do you trade from the 15-minute chart? Jaffe, if I'm saying your name right, I actually use the daily, the 60. At times I'll look at the 15, but the way I set up my charts on my 5-minute chart, I know what's going on the 60, the 15, and the 5 with the use of moving averages. And I'll cover that one day here or do a webinar on that. But if you use moving averages the way I do, you know what's happening in multiple time frames from one chart. All right. Then YM, Mike, wasn't able to open this in the URL address I've been using. Mike, log into your member area if you subscribed to the room. And there's when you click on that, you will be directed to the new link. Okay. So the link that was just open to everyone last week. The Dow, pretty much the same as the S&Ps. You can see the inside little bar here. As prices came off of the low early this morning, and it's pushing up into resistance. But the fact that it's up that much, and it may push a bit higher where, you know, those are the times where the latecomers could get sucked in here, and as prices are pushing up to that resistance. And NASDAQ pretty much the same, but showing a little bit of relative strength, getting above that high there. All right, let me go to a different platform so we can look at something else. A signal. Okay. So what we're looking at here now, all the stocks that are reporting earnings this week, and we'll go through these and see what they're doing during the day and tomorrow, and how they're setting up for the next day. And Dan, some of those stocks, you know, I was kind of setting up here. So, I mean, I'll see on my gap list in the morning, but if there's others that you think are primary to keep an eye on, just type them in the chat. And then we set up and look for, you know, what I've set up here is what I want to focus on on this side, the reds, possible shorts. You know, so the Oxy, I was tried a couple of times last week, but buyers just continue to show up. And I want to see if this will break lower here. Just from an intraday trading point of view, because it's a climactic sell. Paychecks, you know, just picking on the weak guy there. These earnings are not going to come out until June. This is one that was weak. So a lot of times I'll just continue to go after the weak ones because they keep going down if they set up. Dropbox and Dish and Bed Bath & Beyond, which you know, we focus on the technicals, but I mean, I think this is such a great store, but there's obviously something really wrong there. Um, and GME, another weak one in a downtrend that started its way down on Friday. We Twitter last week. We're going to see what this does. It's actually reporting earnings on Wednesday, and SSW will be reporting earnings. You can see the earnings dates here. W day, which we like, this consolidation right here, if it can get through it. So we always make sure when the earnings are coming out. This is the grub that Dan talked about. It's got a similar consolidation. The strong ones, we're finding this kind of a setup there. And you can see somewhat similar here. Same thing, strong and ATR, all similar type of patterns. And so now as the market is opening, or will open, it should be open, right? Going to the gap list, and we'll see how that sets up.
Hey, Greg, just looking at your ATR. Yeah, that belongs on the beast. That's my terminology. But it's just a question for you to comment on is aggressiveness of entry on something like ATR, meaning would you trade it over a prior day's high or wait for a retest or shakeout or something with higher confidence?
Well, from a swing trading perspective, this is a bit extended. So just having 2 days off of the high, I think you'd probably get whipsawed.
That's what I'm
with
worried
this.
about.
So here's the key with any of these things. Now we all trade from the time frames that we want to, of course, but it's all about the money management. So if I said to you, you have to buy this over the day's high, and you say, well, Greg, you just said it's extended, I might get whipsawed. I said, you got to do it. You know, we're in training here, right? Training day. What are you going to do to compensate that? I just said you had to buy it. So how can you protect yourself? It was a great movie. Right? Right? So the answer to that is I didn't say how much you had to buy. All I said is you had to buy it. So even if you bought 10 shares and you put your stop down at $88, I bet you make money because you could add to it. It's all about the money management. Lulu, capping up. So let's just this again. See if everything should be open or close to it. And these are sorted by percent change. This one is up. Lulu was gapping up, Dan, or down?
No, down. Yeah, I said negative gap, minus gap. Yeah, I was watching it for a 30-minute low as a possible bear call credit spread, but no, it's like being negated now. So we have a big watch list, folks, and then we have a picture in over our heads of what it has to do to make it a compelling trade. So just because of the strength right now, it's move on.
Well, maybe.
Or set, yeah. Or well, okay, yeah. You could do if you get
look at
an intraday setup or set an alarm at 94.50 because then it'd be a topping tail.
All right, so this may not lend itself to an options play potentially, but this list right here, this is a gap under a green wine range bar. So that's an ugly gap. Now you can see it. You have to take these gaps and put them in the perspective of the trend and this particular, arrangement or structure. So while this gapped under a green bar and a wider green bar, which is bearish, this is a very strong uptrend coming out of a base. So the hourly, it gapped down to this support area and it rallied. It's rallied quite a bit, and we've got a wide range bar on the 5-minute, which has some time to go. But what you'd want to look at with that is that it stops about there and then begins to roll over as a gap short. So we'll see if it does that, if it gets there. And I can just set an alert. And done. So let's go through some of the others. Oh, biotech. This just reported, so that's out of the way. A little support here. Probably going to take a little time. So the problem with gaps, of course, is going through the list. And what I prefer to see with these, why doesn't this show? Yesterday, I guess they're just too small. All right, give me a second. I have to open my other platform over there.
And Greg, your Tesla, he scares me, but it's weak here again. And Google has earnings tonight. The Apple gap up's failing. Things are still nervous here so far. But yeah, Tesla looks great as a bear call spread candidate if you were willing to take the risk on until Friday. Look how last Thursday's bar was negated on Tesla.
Mm-hmm.
He's a high risk animal there.
That is not deteriorated yet for me to trade that intraday, but it's probably decent for a call spread and earnings. If you can get something with premium, because the earnings are at the beginning of May.
Well, he always has premium because if you want to play with that Rottweiler, you need to get paid for it. I see a Bitcoin moving up here, the GBTC. Wow, look at that, Craig. That's a nice breakout.
Yeah, I don't trade Bitcoin.
Yeah, me either. But it had a gap breakout on the hourly on Friday, and now it's a secondary breakout. Yeah, the hourly looks great. So now back to Tesla.
I'm setting my alert on Oxy to see if it comes back down to the morning low. If it just stays up there, I forget about it. It's got to get weak, and then I can come back to it. So what's the market doing here? Just holding so far. Oh, here's the my little chart off to the side there. I actually like this kind of pattern because it gapped up to the initial resistance. Let's see if it pulls into the gap fill here, if it begins to turn. Boeing, damn, hasn't cleared those highs yet, but strong today. That's reporting this week too.
Yeah, Wednesday. So our spider put, well, here, I'll just...
Snap from last week, if anybody still has it, looks great. And we held on to a little
So that was the alert in our weekly letter. And right now the midpoint's 57. But, you know, the trade is 30-minute high, of course. Yeah, Snap had great relative strength Friday. Yep, nice new high. We have a put spread on that in the weekly letter.
I'm going to short slob here. That was under the 5-minute low. I got the alert. It was pretty fast, but it'll probably retrace a little bit. So this is, you know, let me just give a little input on the education side of how we do things. And so we look at patterns, obviously, for making our choices as to what we want to trade: relative strength, relative weakness, what's the market doing, and so on. So that's universal. Doesn't matter what you trade. But as you start trading, you know, different stocks within the same sector, you become familiar with the family, so to speak. And within this family of oil stocks, Schlumberger is the bit of a dog, right? Meaning, while the daily chart is broken out here, it tends to be the laggard. And even when the others go up, this can go down or go sideways. So just to show you a huge comparison to show that, look at Oxy. Right? Same sector, but you know, Oxy is strong. Look at and now there may be some differences as we go through, you know, some of these. So this is equipment, but you know, Halliburton broke out of there, was stronger. MRO was stronger. You know, they're all coming in here. So I was just picking some that will go down. So SLB, if the others go down, this should go down.
Hey, Greg, that reminds me of that joke where two guys are hunting in the woods and I come across a bear who starts chasing them. And then he tells his buddy, you know, do you think you can outrun the bear? And he says, I don't have to. I just have to outrun you.
That's good.
So that's what you're saying. I'm just, of all these strong oil stocks, I'm just picking on the weak one. Yeah, Apple here is not doing it.
Oh, it was weak yesterday. I mean, last week.
Oh yeah, yeah, and yeah, I'm just, yeah, it's not ready for a swing trade at all. I was just because of the hourly considering, you know, a day trade if it's set up.
I mean, it's going to look pretty bad if it breaks under these lows here.
And I think it is going to, because it started with a pro gap, and look at that velocity down.
Mm-hmm.
It's a speed bump right now on major support in the 200, but yeah, velocity is still down. And I saw you just pulled up Alaskan Airlines. You know, compare that to AAL. It's the dog.
Mm-hmm. Just going through these gappers here, seeing. Well, Twitter got sold into. Guess it needs more time.
And
most of these are messy.
well, and I just saw your Merck. There's another example. Compare MRK to BMY. It's just, they're totally different. It's amazing. But look at BMY though. For a climactic, you know, I've been watching that on the daily for a couple days now. It's still not ready, but is a bottoming tail. And if the hourly can break out, then set up a higher low on the 15-minute chart, then it might be ready for a bull put credit spread for Friday. And it's, oh, shoot, it must have earnings, BMY. Yep. Yep, that's why, because they're very juicy for Friday. But you can still swing and day trade it.
Market's still coming in slowly.
Greg, you see your CVNA?
No. Is it worth looking at?
Yep.
It looks good. I just don't know that it's ripe enough.
Right. That's right. That's why I put it in the letter as a watch item, but it's sure holding strong.
Mm-hmm. So when I see a pattern like this, thought is it's either got to pull back, some maybe here, or when I say ripe, did it go sideways and chop around long enough? And 3 days, and this is just the beginning of a day. Usually it needs more than that to do something of significance, unless it's, like just super bullish. And so, which lends itself to what I said earlier. If it was to start breaking out here, the hourly chart is actually supportive of that because, it's going sideways. But you'd still, you got two choices. You give it ample room or, much wider room, or if you play it tight under $29, it's kind of like, if you get lucky, when this thing does turn out to be like, a superpower type of move, it wouldn't violate that. SLB's picking it up. Had to. The others are going down. Oxy is getting close. MRO falling. So where is this?
Greg, do you think gold, silver weak just because of rising rates or more fundamental commodity inflation, tied stuff?
I think that the tea leaves are not set up for gold just yet.
Well, no, right.
Someone's asking me on YouTube what made I picked SLB because I know it tends to be one of the weakest ones. Maybe not the weakest, but as I showed before, look at the distance that SLB got above this high. I know that this stock is a laggard within the sector. And I knew it was breaking down. It was rolling over like some of the others. And as I showed you, compared to, there's my Oxy trade. Breaking down here. So look at Oxy. I mean, the difference in the relative strength and weakness in SLB compared to this, you just know that, you can just see the distance. Even if you didn't know any of these two stocks, you just know SLB is a laggard. MRO. While this didn't have a move like Oxy, you can see its distance above the same basing was stronger than SLB.
Greg, look at low LOW for another dog. Home Depot, deep retracement. So I looked at LOW and that looks horrible.
So that looks perfect for a call spread.
Yeah.
End of May.
Yeah.
End of May.
Yeah. Let's see if we can get paid.
Would you consider a bear call credit spread on Apple or IBM?
Well, without even looking at Apple, because I know what it looks like, the answer is I think you missed your entry, because we always sell call spreads over resistance, and resistance is too far away. So on IBM, let's look. Same, it's too far away. Patrick, is the problem. That's the problem. It's just the strikes are too far away. You won't get paid. HSIC that I was watching, new high, but
Well, let me clarify that a little bit for Patrick.
Sure.
With the patterns. What Dan is saying is that what we look for, where is the significant resistance area? And this is already broken down through support, which is good. But to find strikes with any premium that would be worth your while, you'd be like looking for, the pot of gold at the end of the rainbow, to find something, where you could sell a call spread like that up here. So one of the things that we're going to start doing in the room here is being able to take advantage of some of these, because we are together intraday. And what we're going to look for is, we're going to go to this screen right here, and these 30-minute in this list. So we've got a daily, and we're going to go to a 30-minute chart, and we are going to look for stocks that are weak or stocks that are strong and that are basing. Okay. So this was basing. That's why it's in the list. I don't know if I have to refresh that. No, it's fine. But it's already broken down. So it's still in the list. And as we go through these, there's one. We're going to find opportunities to take advantage of these moves with options, or trading the underlying itself at the appropriate time. So while, IBM, based on the daily chart and what we would put in the letter, right, we could look for other setups intraday, and we could use options that are, obviously closer to where the prices are at, and maybe even a little shorter duration. We'll see. So here's 130 minutes starting to break down. And even some of these, they lend themselves to directional plays, but they may not have multiple trend alignment. So we may have to be a little faster in management, which is just fine, in the venue of this room. Qs continuing going down. They're past the gap fill here.
And IWM is velocity to the downside under Friday's low. So Greg, on LOW, is a month out too much for you? Now, I mean, look at low in terms of an adjustment strategy. There's some patterns, and I'm going to ask Greg if he likes this idea, that it looks totally bearish. We put on a bear call credit spread, stop over the highs, or my question is, in rare patterns like this, if it took out the high, what would it be? And the answer is a breakdown failure. So sometimes we ask ourselves ahead of time, instead of taking the stop, if it does trade over those highs, do we convert it, to a directional? Because then it turned bullish. And, we got that unfilled gap, and we had two prior breakouts fail. So I don't think it's that scenario. But I guess I'm talking you through some, adjustment strategies. Sometimes we just leg into an iron condor, which is out of the money call spread and out of the money put spread. If you know, the breakdown or breakout failed, but it's still acceptable. Sometimes if a bearish pattern turns bullish, like if you have a pro gap. I remember that happened to us in Costco last year. We had a bear call spread. It had a pro gap above the consolidation, and we turned it into a directional.
I changed the colors because I think they're a little easier for someone watching to see.
Oh, those are pretty. Looks like Christmas.
So, yeah, I mean, this is obviously a bearish pattern. It could not move up. So, I mean, if the premium is there, it's a trade. I mean, it's breaking down. I would say do it.
Yeah, the if we go out to May, which is 4 weeks, we get 47 cents for a $2.50 wide. Well, now it's dropped to 45 cents. So that would be the 87.5. $91 for 45 cents is $2.50 wide bear call credit spread. And, you know, my rough rule of thumb, I want 10% of the spread. So 10% of a $2.50 spread is 25 cents, and this one's 45. So it meets my juice requirement. But part of the reason is, you know, it's high volatility, but secondly is because it's 4 months out. If I only went 2 months out, I'm surely not going to get that much.
It's how many months out?
One. 4 weeks. But as you know, we just go into trade management mode. So, you know, if it falls a couple days in a row, you know, whatever, we just manage it. Put it on and immediately, you know, bid 10 cents and see if we get filled into weakness.
Dan, conversation that we've had and you've spoken about as far as management of using the criteria of 2 times premium received for a stop.
Yep.
That would put the stop on this where, like $85?
Well,
how does it work?
Okay, let's do it together. And this is just, you know, I'm swagging it. So I'm showing my Thinkorswim platform now. So here's what we're thinking of doing. The May 87.5. So here's another lesson, folks. Look at this open interest. I would have preferred the 88s, but there's zero volume. And the spread is still fine, but I said on the, you know, 87.5 strike is still fine, but I have volume here. So when I want to get out, we're going to have more liquidity. So then I look at, okay, what strike do I want out of the money that I'm willing to give up that amount of the gain? And it was tighter earlier, so I don't like this 21 anymore. So I'm going to jump down here and change what I just said and do the 92.5. But see, now it's a $5 spread. So that doesn't make sense. I would rather have a $2.50 wide spread, because then my maximum loss, if this has a catastrophic gap against me, is cut in half. So I'd rather take 45 cents or a $2.50 wide as opposed to a $5 wide. So let me change this back to my 91. Look, that's a no-brainer. I'd rather take 47 cents for this. Look at well, I'll come back to Philip Morris, but I've been watching that, and I said it's totally not ready. And now on the hourly chart, it's making another swan dive lower. But I will trade Philip Morris. It's just that's a fact when it sets up. All right, so now let's go back to Greg's question. If you just didn't want to sit through the stop and you just said, under no circumstances do I want a loss of twice the credit. And so, Greg, we got when we reference twice the credit, I got to put that in perspective. And here's what I mean. It's really, and I'm just going to put this up to 50 just to make my math easier to follow. Twice the credit, 2 times 5 is $1, right? But when I'm talking about twice the credit of your loss, I'm really talking about risking 2 units to make 1. So it's really, in terms of me answering your question, it's 3 times the credit. So 3 times 50 is $1.50. So if I stopped out at $1.50, then I've lost $1, right? So it's 3 times the credit is going to result in twice the credit being your loss because you already put 50 cents in your brokerage account. So if you took in 50 and you close it out at $1.50, well, then you've lost $1. And then you might ask, well, why on earth would I risk 2 units to make 1? I thought you guys told me, hey, 3-to-1 reward to risk. That sounds totally backwards. And the reason for that is twofold. One is, well, it's manyfold. It's because the odds favor selling options because of time decay. So even if the stock doesn't go anywhere, we're going to make money day by day through theta, which measures time decay of the option. Number 2 is the 85% success rate. We're having many more winners to losers. And number 3 is these stop outs. When we do stop out 15% of the time, it's not always at max loss. So you can't assume in terms of your batting average and net profitability that you're going to have the maximum losses on every one. All right, so now let's go back to the question of where would the stock be if I hit $1.50 credit? So what I do to swag that number is I just look at these quotes and I say, okay, where can I put on a spread where if I had to buy it to close that I'm paying $1.50, and it would be 87, 88, 89, 99. Oh, I'm sorry, my math was off. It's $3.50 wide spread. So I'm just looking at this to bring in $1.50. So let's try this one. And $3 wide would be 86.5. Voila, I got it on the first try. So, and this is a little hard to explain. So if I sold this call right now, it's close to my $1.50 debit, right? So the one we're talking about doing is selling the $87.50 call. And now the $83 call is $4.50 closer in delta. So now I go back to the chart. Low. and I add $4 to the current stock price, so that would be 87.80. So where's 87.80 on here? Look at that, 87 right there. That's exactly where my stop would be anyway. My stop is over the high of this topping tail bar. So this example just worked out, Greg, 100% perfect. That we enter it at 50 cents a share, and if we stop out over this bar, it should not be more than, you know, that $1.53. But that's if we stop out fairly soon. If we have that same stop out in 2 weeks, it's not going to be $1.50. It's going to be significantly less because of time decay. So if I wanted to then measure how much time decay, that's what theta tells me. So I would look at my theta number, and it'll answer for me how much I'm making per day in time decay. And then I would take that loss of $1.50, not the loss, but the price to buy it back, 153. If it happens in 2 weeks, if it happens in 2 weeks, then I deduct my theta gain, and then I have a significantly smaller loss. So that's it. That was a long-winded answer, but that's because that was my swag method. Yeah, so folks, I'm going to post this to our Master Trader advisory letter, the entry on LOW, and it's going to be under Friday's low. I'm going to post that bear call credit spread, the May 87.5/91. So I'm going to type it up right now.
This W day and Grub, they're holding up here with the market dropping. Nothing to do right now. CVNA, nothing.
But Greg, let me add to that. I was looking at those earlier also. If the market, which I call the mothership, was more bullish, you know, like taking out the 30-minute high, then those two, depending on, you know, I'm not looking at them right now, but how deep they get into that hourly resistance, I would consider starting to scale into them lightly. Because why? Because you're going to get better prices. Even though, you know, they haven't broken out, but if the mothership is doing well and they're acting well intraday, sure, I could start scaling in early.
All right.
But, you know, that reminds me of a saying, and maybe it came from Jesse Livermore's book. I don't know where I read it, but I always remembered it. And it is, there is a price for certainty, And what that means is, well, the breakout didn't occur, but I'm getting a better price. If you want to wait till after earnings, if you want to wait till after they announce whatever, if you want to wait till after the presidential election to get that certainty, then you ain't going to get the same price. So they go hand in hand, risk and reward.
I look at this SLB. I don't know if I know whatever I threw it out quick, but I think you could have got filled because you have to get used to making decisions relatively quick. We're in this environment if we're going to day trade. I'm just looking at what it's doing now. It's sitting right at this little shelf of resistance, so it's stalled. But so far, it's not bouncing. And so I've taken half. My stop is break even. I can't lose any money, except I can give back some of the money, of course. Today's range is not quite as big as Friday's range. But these things are being sold now. And as I'm thinking, and I have to think with the charts as guidance, maybe you can get down to that 200 MA. Let's see what else is moving here. Well, all of a sudden, the financials are getting a little love. Regionals. KRE. KRE is the regional banking ETF, which we have a position in. It's slowly coming back, but it's still sloppy.
Yeah, Greg, actually on that one, in terms of a management strategy, I mean, unfortunately rolled it because, we were bullish on banks and yields and the weekly and monthly charts. So we sat through a little bit of a pain. But what we did to help minimize the pain is we sold additional out of the money puts around it. So we're short an in the money put and an out of the money put that expired. Actually, it expired on Friday. Worthless. So that chipped away at the open position. So on the next pullback, we can do it again. We can sell another out of the money put, the 59s, like we did last time.
Thank you, Amos. Who was talking to me on YouTube? I still have the YouTube open here. So let's take a look at the markets here a little bit. And, so for the daily is nothing, just an inside day so far and consolidating here. But going down to the 5-minute, we see, it's not able to get going here and kind of like right here on the edge of where it needs to get turned around. If it was that's going to happen today. Well, a lot of times this kind of a down day, I was hoping this would come further down and then begin to turn around. But if it holds here, I'm not a big fan of a pattern that looks like this from a point of if it was to close this way, looking for a long tomorrow. With the narrow range day, I much prefer a pattern that has a poke to the downside and comes back, or a bottoming tail. But let's see how this shapes up. We've got a long time to go to the end of today.
Yeah, that workday, WDAY, yeah, it's just an hourly resistance. So I would not enter this early. I need, it to go sideways more, have resistance. And grub, the same. Yeah, now it's back to being a doji bar on the daily. So yeah, definitely wouldn't touch that right now. Wow, Hasbro turned green. Wow, look at that reversal, Greg. HAS.
It's a relatively big gap. And after 4 days falling straight down.
Right, but I call that the bearish gap that bullies. It fills the gap within an hour.
And now what? How do we make money from that?
Well, what you do is then look for an intraday setup. So if that's the answer.
So much. I mean, if it had a decent pullback, maybe.
Pullback or sideways, correct. But typically on these bullish reversals, the general rule applies of they should not retrace more than 50% of the day's range now.
So for those in the room that, you'll see Dan and I trade differently. He is 100% focused on options, and I'm more, if options are there and I like it, I do that. I day trade, I swing trade. So my plan for intraday trading, and was looking at this chart right here, would be the alignment of these moving averages on the 5-minute. And, even whatever, looking at the daily, you couldn't get me to touch this, unless you said you have to do it. And then I'm going to buy, It's a minuscule amount and put the stop under the day's low, whatever. So with a gap like this, 4 days down and a gap of this size, I mean, I wasn't even thinking about Hasbro, but Dan mentioned it. It would have been like, okay, 1 minute chart or 2 minute chart looking to buy the gap down. And sometimes you get whipsawed on these, you know, and you have to do them a second time. But the way this is set up now is this needs, you know, who knows what amount of time to set up. But the alignment of these moving averages, I can't do anything because it's into this resistance here. These are pointing to the downside. It's a big move up. So it would have to eventually turn around. And just to show you the difference, see UAA, which just picks something else and the moving averages are pointing up. It has to catch up with these shorter term moving averages, some type of consolidation there, you know, where it is probably formed some support. And then I could look to go long that type of a situation. So what you'll see as we come into usually later morning or certainly in the afternoons, you know, I've trained a lot of people that are, you know, run chat rooms today. And I could tell you that probably 99% of them are gap traders. They trade for an hour. And after that, they have moved beyond their level of confidence of doing any trading. And they're good at that, you know, so that's fine. So they don't trade afternoons. And so they talk a lot. But the way I approach things is most of the times, the setups, the good setups that will move a lot bigger will come either later in the morning or later in the afternoon, where the 5 minute chart becomes lined up with the higher time frames and a tradable void, and you get bigger moves. So the slob trade, you know, I was stalking the oils and the slob quote came up. But one of the things here was that, look, you see this wide range bar? That happened in the morning on Friday. So if you've taken the Master Trader Technical Strategies course or the Gap course, right, what I talk about is when we see a wide range bar like that, one of the concepts is, did it fall in the afternoon and then go sideways and form a base into the close, which if I'm going to short that in the morning, that's the setup that I want. Rather than a setup, whereas it could have went sideways through most of the day, and then in the last hour or two, fell straight down. And then it's breaking under those lows in the morning. So it's already dropped a considerable amount looking at the intraday time frame, even though the daily chart could look the same when you compare the two. Pat saying, if high volume on Mattel and Hasbro has rebounding, is Matt setting up for a trade? Mattel looks different than Hasbro. So I like this better, Pat. And on this 5 minute chart, what I know is that the hourly is still in a downtrend, but it's got a void here, and you can see that it's basing out. So this didn't move as much as the other one because this one didn't gap down as big and had a wide range day on Friday with the tail. So this is going to report on Wednesday. Now, of course, you're not going to do a put credit spread on this when it's going to report on Wednesday. So are you thinking day trading or swing trading this? Actually trading the underlying? You're looking for a day trade. Well, let's take a look at Lulu that I just got alert on. I don't know what that's doing. It's into the gap fill here. I'm not crazy about this one. Maybe later today, it's starting to, if it consolidates here and then starts to roll over, I'll come back to it. I wouldn't trade this. Not right now anyway. The Hasbro is up into the gap fill. It's made its move. It's almost 10:30. The market's starting to rebound. I just think we can find better things. Hold on.
Yeah, that Apple, I have all the fangs on a 15-minute chart. I noticed it made a new low and now has it engulfing on the 15-minute chart. So that's a small bottoming tail on the daily. We love shakeout patterns. So the fact that it, took out some stops from trading under Friday's low, still not a great pattern, just making an observation. Oh, yeah, look at spiders near the high.
They made that little double bottom.
Yeah, so we have that put spread. Let's see what the juice is in it. But see, on this one, I told them a limit of 60 cents. Let's see what the midpoint is right now. Well, the limit's 57, but if it takes out the high, they still aren't going to get filled unless it then retraces a little bit, which looks good on the 5-minute chart. Or we just make an adjustment and say 57 is okay. You don't need to get 60.
1 second. Let me show you something here. I'm wearing different hats, doing different stuff here, but check a look at this. So here's USO, the ETF for oil. I can't show you crude oil unless I bring up the other thing. But anyway, it looks pretty much the same. I mean, crude oil has trades, pre-market. But anyway, crude oil bounced. Look at MRO. Bounce looks pretty much like crude oil. Look at SLOB. Just sitting there going sideways. It may catch up. We'll see what it can do. But right now, this is showing the relative weakness that it typically does. So, USO being up at this prior high, if sellers are going to come into it and it starts to drop, well, then, in theory, based on the connection to oil, right, MRO should go down. And just remember, most of these oil stocks do have intermediate term bullish patterns on the daily. But SLB going sideways here while, oil bounced and the others bounced and Oxy bounced. If oil gets weaker, again, this should make another drop and maybe a measured move to the downside. And, you know, something, never feel bad about missing a trade that you see put on and it works. And I say that because what Dan and I are going to do in this room every time is explain what we're doing and why. So, well, one trade put money in your pocket or take some out at times, it's going to happen. The education is going to teach you how to do this forever.
Right. Teach you how to fish. Yeah, I didn't check the news on Alcoa AA, but that is one ugly gap on that stock.
Alcoa?
Yeah.
It was doing great.
I know. Past tense doing was proper reference.
Okay.
Wow, Greg, you wanted to see another relative strength oil in this one? Wow, it's much different than the sector, but check it out.
Which one?
NRG.
It's strong utility.
Oh, that's why. Okay, so that answered it. I thought it was oil. Yeah, but it broke out very strong, rested, 3-day pullback. Looks good. I'm gonna watch that one now. Oh, yeah, I'll just set an alarm.
Well, and you could buy half and look to add to it. I mean, it only didn't move that much out of the base.
Right. So over the high, or wait until the afternoon. It's kind of an
Just
hourly.
wait till the afternoon, the 5 minutes in a downtrend, and it's consolidating here.
Yeah, the hourly's a mess. Yep.
You know. So just to repeat, you know, for those of you in the room, the red line, right? That's the trend on the 60-minute. Purple one is the trend on the 15-minute. And the blue one is the 5-minute. So what we're looking for is for these two to be in alignment. And ideally, this one could be in alignment as well. Right now, they're kind of like mixed here. But if these two are in alignment, let's just, for example, and I'll find examples to show you the exact picture. But if these were pointing down and the red one was below, we'd want it far below, which would tell us that the 60-minute had gotten extended to the upside, and now things are correcting lower. So it's probably something like Oxy will look like that, where it's starting to look like, not even, it doesn't even, You know, so because it went sideways for a few days, right? Like over here, you know, it wasn't actually rolled over, but so not ideal, but we'll find them as you see them. You'll see how I use the 5 minute with these moving averages to know what's going on in other time frames.
Hey, Greg, our check out FND. We were short a put spread on that expired last week. Full profit, but look at it. It's you know, we might have to do him again.
1 second. Okay. Which one, Dan?
FND. Yeah, I type symbols in the room many times.
FND.
Now, if you don't mind holding over earnings, the $50 puts for May are pretty darn juicy at 70 cents. It's like, 1.3%, and it's $7 out of the money.
You feel lucky?
Hey, that was the name of my video this morning.
Mm-hmm. Mm-hmm. It's like you want day trades that'll move a couple of dollars. Typically, that would require higher price stocks, right? Something like Facebook. And I can certainly scan for higher price stocks. What price ranges do you usually look for? I mean, to move a couple of dollars in a day. I mean, obviously the $100 and higher are going to be, very high odds of finding something that moves a couple of dollars versus a $30 stock. Now here's one that could have the potential to do that tomorrow if it closes like this. Earnings will be at the beginning of May. You go far out of the money. So cheap options far out of the money that are going to double in price.
I mean, there's nothing wrong with buying out of the money options if you're expecting a massive move and, you're okay with, fighting the time decay. But that's fine. Again, as Greg said earlier, in our courses, we teach you how to fish, and I'll teach you the pros and cons in our option strategy series course. And there's nothing wrong at all if that's your flavor of trading directionals. Because you're right, you will get a return on capital that dwarfs ours, but we're going to make more total money because of our in the money 80 delta.
So Pat, here's one that's interesting. That could set up for you tomorrow. So, it's down over the last 2 weeks from 125 to 115-ish. And the momentum is stalling here and it's beginning to stabilize. So if we come back to this late today or tomorrow to see, does this hold this area with this minor bottoming tail bar? It is something that could bounce. I could say conservatively, it could bounce $1, $1.50. If it hangs here, and you could get that kind of a setup, that kind of a pay in that situation. So you'd have to obviously look at the options and yeah. So, so you're somewhat familiar with this, but it's probably, set up differently than what it was at that time. Now, overall, this looks more bearish intermediate term because it does have this head and shoulders top. But I've seen many times these kind of setups where they just poke under the neckline and begin to stabilize. Shorts get nervous and they'll run it back up and then it'll roll back over again. So, I mean, put it on the watch list. And so I'll set an alert for you here. I don't know if it'll move today or not, but this setup would be best tomorrow. And maybe the market gets itself settled down by then. And if you had the market moving up and this thing began to pop and, your options were lined up with the pricing that you like, well, should be a good setup for you. Something, Dan. Maybe even a directional for tomorrow. guess Dan stepped away. I've got an alert on that. Low price, low volume. All right, 180s. Market moving back up to the high of the day here, slowly grinding. It's kind of shaping up the way I spoke about early pre-market. This kind of choppy, kind of nowhere day. Pat, write down this one for tomorrow too. We want to see how it ends up. I don't know why this gapped up like this today. It says earnings are at the end of May. But this kind of a move, if it can hold on to it, sometimes they pop again the next day. Clearly, it's showing relative strength to the market. So I'm just going to put it in the flag list. We'll come back to it.
I mean, I think it looks so good, Greg. I'm tempted to do it now. It looks fantastic.
Do it.
Well, I'm looking at puts right now. Unless, I'm more reluctant on swing trades right here at 11 o'clock. But so for a swing, if it holds up, yeah, but I would do a put spread. 65, there's no juice for this Friday. Next Friday. Well, you can get 45 cents. I wish it were more. Yeah, Q's acting very well now. Yeah. And that Apple, look how that I mentioned earlier, Apple making that new low. And that was the low of the day. Facebook rearing back. I think Facebook over last week's high is a put spread candidate. Mike, it was May. So it's a month out is, a problem, but it's under Friday's low. So it hasn't hit. I got a grub alarm just went off at 104. Wow. That's why. Wow, that's a big bar.
Yeah.
Hourly's extended though, but that will be a fantastic trade for the afternoon.
Grub?
Yeah.
Oh, you mean like the bar is extended?
Well, hourly, yeah. Yeah, we, 2 hours up at resistance, but the entry is still a valid trade over the high. But again, as you said, we're in this room, we can get better entries.
So here's a great example of what I was talking about with the moving averages. Now, what we want to see this afternoon are these two moving averages. The red one not going to move too fast, but these two moving averages to be relatively close to wherever the prices are, all right, on the 5-minute. And if it went sideways, these will catch up. If it pulls back, it'll come to it. Ideally, they work together where grub comes down a little bit, moving averages come up a little bit. Dan, MTCH is another one with this similar type of consolidation pattern after a strong move. And
Yeah.
pump, PUMP.
Yeah. I like Mitch a little better than Pump just because of the, stronger uptrend.
But look at the CVNA now. I mean, it hasn't done anything terrible, but that's more of the type of reaction to the high that would be expected in a stock that the consolidation isn't, as I said, mature enough yet.
Correct. And this MTCH, I love the bottoming tail that traded under last week's low.
Mm-hmm.
Yeah, Mitch doesn't have weekly, and the monthlies are very juicy, so it has to have earnings. It's just massive, the amount of juice you can get on these things. There's an expected move based on the option pricing of $6.50. But Greg, I mean, look at that daily chart. I mean, is that worth taking a gamble? Feeling lucky? Because that chart, I don't see many gaps. So it doesn't suggest a $6.50 move to me. Well, let me rephrase that. This is a $6.50 move up or down by May expiration, but we manage trades once we're in it. So if I sell options into earnings, I'm just worried about a gap risk. Not that it can't move $6 in a month. I just don't want it, to have a catastrophic gap like I did in that video lesson this morning.
Did you post that on YouTube?
Yeah. I mean, the $38 puts are 55 cents. It's massive.
On this Mitch?
Yeah, $9 away.
So why not do a put spread?
Well, I want to. I'm kind of wanting your feedback because I know you ain't holding over earnings, and I'm always pushing you a little bit if it makes sense.
Well, I mean, if you think it's a trade, man, do it. I mean, okay, at $38, if you could, the $2 wide spread, what you're saying, it seems.
Well, you aren't going to get 50 cents if you do. This was naked. The 38s are 55 cents to do a spread.
I'm never going to do that.
Well, so if you want to spread $5 wide, 38, 33 is only 30 cents. Because when you have high volatility, they're going to be high across the strikes. So you either have to do it naked or you have to do it really wide to get the juice that you want.
Well, you know the drill with naked. I'm only doing that if I wouldn't mind owning it. And I would dread owning this if it gapped down to $38.
Right. Got VIX new low as the Q's made a new high. Yeah, I'm watching the VIX this week because if the market holds this this bearish consolidation in VXX might be ready for another leg down. I mean, it's still, VIX is still high relative. I mean, it's been high since February breakout, but it's still high relative to its contango behavior, and it's still has drag.
So what were you thinking about with this?
Bear call spread under the lows or whenever. See, I would enter this early if I had confidence that the spiders are at a turning point. Then you just do it right now. Because remember my statement, you pay a price for certainty. So under last week's lows, you're going to get paid a whole lot less than if you did it now. Now, I wouldn't do it now. I'm just saying hypothetical. I might do it in the afternoon if the markets hold their gains through lunch and then bust out after 2 p.m. to new highs. Then I might enter VXX early. So I'm looking right now to see what we'd get paid, you know, like the 45, 46 for Friday. Well, the 45s are 51 cents, 46, 40 cents. 45.5, 45 cents is my 1% rule, and that's for 1 week's of risk. A delta of 0.20, which means that there's an 80% probability of it expiring worthless, but that's just mathematically. We're looking at the chart, so that increases our confidence. Wow, IWM, remember I made the comment that the velocity to a new low, and now it's making a new high. So buyers definitely started buying in the last half hour.
This grub's not waiting. I'm gonna have to get a pullback.
Yep, so it triggered, but I gave a limit in the letter. A limit of 50 cents. Wow, it is so spready. My God. Jeez. The 97.5s are 10 cents by 70. Good luck getting filled there. Yeah, we aren't going to get filled. Another example. I don't know why they even offer them if they're going to be that unfair about it.
Well, some of these, a bunch of what I'm finding is that a lot of the things that have this somewhat similar pattern, they're going to report next week. And they, if it's anticipated that it's going to be good, these things might run. So I'm setting alerts. This square, it's just consolidating here. The hourly is kind of broken, not in alignment with what I want. But, a lot of these things just need a little bit more consolidation. Somewhat similar to, the market having come in as it did on the end of last week. We just got an inside day here. It's just resting. They have the Dow in the upper left-hand chart. Inside day, but a little bit weaker. And I talked about this in the letter, the advisory letter video. This topping tail on the weekly in opposition of this retest pattern down here. And, whether, and the daily having moved up and where it should set up a buy, that misalignment of the weekly and daily and, it just continues to support the type of market environment and trading, choppy type of trading that we see. Now, if this was to, say, over the course of this next week, work out so that this week's trading action held this area and began to turn around to move up, well, the next reference point being up here. And what would happen is that the weekly negating the bottoming, the topping tail, and this starting to move up, we would have an area where prices could move with momentum. So this is what we have to be looking for as, something that could line up and then offer the potential for some bigger moves. The presenter was very bearish. I don't know what he was looking at, but excuse me. What I explained this morning, I don't know how much of the letter you could read, but one of the things I wrote, I talked about bonds and such. I said that this correction will work its way out in a move to the upside eventually. So to be very bearish historically, and I mean, define very bearish. I don't know whoever you were listening to. But to me, very bearish means bear market correction. For this week, he was bearish. Well, flip a coin, in this market, as I've coined Mr. Schizophrenic. One day could be, the end of the world, and the next day it's, party time. So, the thing to do is look at the charts and see what they tell you. So many of these people, have their red light, green light indicators that they want to sell you. I don't know how they come up with decisions, because, if we look at whether it's the Russell or whatever, you've got a trading range going on here, a sloppy trading range. The Dow pretty much, whatever, held these lows, a lower high, sloppy. In the video, in the letter, I talked about, if this was to follow through and this broke below, the spider level down here, it could go down to this. But the problem with having that type of a bias, like Friday's price action could certainly have you leaning toward the bearish case. And because, it was a steady selling day. However, you still have to put that in the context of the fact that you've got this bottoming action here. Prices cleared resistance. Yes, they came up to the next resistance right there. And now they're pulling back to where they're kind of caught between two levels. And just you cannot take one down bar, one larger down bar, or one topping tail and make a bias just based on that. And a lot of people do. Now, as you put all of this together, as I'm explaining it to you, the end result of the analysis is really that prices could go in either direction here, because that has been the way this market has been. So you've got misalignment of these multiple time frames, which historically means, uncertainty and choppy type of price action. So right now, and I said this morning in the pre-market update, was that today was more likely to be, a choppy kind of a day, because it was starting the day higher versus down, where it'd be, a greater inclination, just like with that Hasbro, whatever, that gap down, and then, buyers step up after 3 days down, 4 days down, 5 days down, and then it gaps lower. Buyers usually step up at that time, whereas it gapped up, cleared some resistance, came down into the gap fill, it retested it, and now it's pushing up. This type of pattern doesn't lend itself to, a big green day, to reverse Friday, but hey, we all know anything's possible. So what we're looking for is to put these different time frames together and in alignment with our plan and how we want to trade for the highest odds setups. So again, calling the direction ultimately to one side this week, I don't know what he's looking at, but I'm sure he's kind of got to be scratching his head a little bit and wondering why the market's not going down. I tell you, the part of the danger in being a presenter in that way and telling others, ultimately what's going to happen, and is that you get attached to your opinion, and now you want to be right, You start looking for all the reasons why you're not wrong. You always have to have two scenarios. Well, these oils came back again. I mean, institutions are after these oil stocks for sure. You know, Dan, I'm aware of those seasonality things, but you know, I rely on the market internals and multiple time frames to tell me whether those things are a possibility. Um, I mean, for years, you know, it was like, you know, August is a bad, supposedly was a bad month, right? Well, remember multiple years where August was the low. And, you know, then it's like September sets up, is a bad month setting up, you know, the continued correction in October that sets up the low into the end of the year and the Christmas rally. That hasn't been happening. So, you know, you have to take those kind of things and say, okay, that's a piece of information. Is that information lined up with what I see happening on the chart in the market internals? The spiders, yeah, they're up here. And as we come into the doldrums, there's a relatively wide area there. Notice that moving average is right in alignment with that congestion there. So the tell is going to be how any reaction to this resistance area is going to tell us, you know, how aggressive buyers are. So if we use the minor, it's right there. All right. There's our minor resistance reference point. And I'm just seeing what's directly to the left. That's that minor resistance area. Interesting. Retailing being bought after the breakdown. And almost everything that we look at has work to do. So, like when we see intraday moves, like what's happening this morning, and you have to put them in the context of hourly and daily and time frames, even as an intraday trader. And then let's see how any corrections shape up here. So XRT, what is performing well there? Okay. Let's drop this down. Earnings 5.9. I like the base. Trip. This was going to report in 2 days. We're going to come back to this in the afternoon, see if it bases or pulls back. Snap moving up nicely. Expedia. Now it's Akamai. Right, this looked great last week over here. And I actually bought it and got stopped out of this. And it fell apart. So we'll see. And that's when the market got weaker. And I'm going to see if it turns around. It's trying here. But overall, this is not a bad pattern. Even though Friday was an ugly day, it's just, one bar in a consolidation. So if it can get back above the high of the red bar, this opens up the door to a big move. This is, again, we have to see that actually happens. But this is the concept. If pricing get above the red bar, it's what I call a red bar ignored concept. Now, it's in the context of a stock that has moved up, it's pulled back, and it's coming up, and it's just consolidating up here. And, so it had a bad day on Friday. It's stabilizing today. And if it can clear this area, it's just the type of pattern that makes a big move. But we're going to want to know about that. Let's just say 73. Even if it just gets to 73, that should open up the door to moving higher. Let's do 98. So when it's up there, then we can see how it reacts to the whole number and how much it backs off. There's a lot of things that look good. I'll tell you something that I've experienced over the years where, I may have been looking at the market, indices and thinking maybe like this fellow that presented to yesterday said, the market looks like it'll go lower or whatever. He's very bearish. Anyway, point being, I start scanning through like I am here looking at a whole bunch of stocks, and I see stocks with patterns like this. And it's just like, it just doesn't seem feasible that the market could have any kind of a large correction with so many stocks that look bullish. Now, I could find as many stocks that look bearish in this market because it's just been that way. But, when you find it difficult to find anything that looks positive, sure, that's when you really have a scenario where the market could do something ugly. It's really the way things have come back today. We'll see how they hold on to them this afternoon. That's going to be the tell. And we got, tons of earnings coming out. I guess this is going to report after the close, I assume. Google going to be, of course, watched. He set up a dozen trades for this week, and all of them were bearish setups. Well, you know what, Pat? Look, people can be wrong. I'm not 100%. So if he set them up, what was his trigger? Did he just say this is going to happen? And he put the trades on. And now he's in pain. So if we had a bearish bias with bearish trades, they're always going to require a break of a prior day's low or some reference point. And that has saved us so much over the years. And that little requirement, if he had something like that today, rather than say, hey, I'm executing these trades. If the market moved up or the stocks moved up, he wouldn't get filled. So he's trading the diamonds, which really not doing much here. So if it triggered 243.68, which so it missed his entry by 20 cents, thereabouts. So that's okay. So I guess you wanted to see, I would think, you didn't want to see it break that low. I don't know where he got that number. 243.68. Well, I guess he figured if it got down close to that prior swing low on the 5-minute there. Anyway, so it hasn't triggered, so he's okay. So did he give you a stop loss? You know, as I said this morning, a gap down or a move below this low today, in all likelihood, would have been bought short term anyway. But, you know, this move down at the end of the day versus a sideways move, you know, any type of gap down or even acceleration lower, most of the time is going to get bought in either at 10 o'clock or 10:30. All right, guys, I'm going to take off for a little while here, and we're going to see what sets up here in the afternoon. And if these stocks and the markets can hold on to these gains, I think we're going to have a lot of long setups going into the close. So let's see how they pull back or go sideways here or whatever they're going to do. And we'll assess them in a little while. Be back a little later.